Hello. If you can guys hear me, let me know. I'm so sorry it took me this long. I feel like such a fucking boomer because I had to like download the Twitter app. I'd never joined on it before, and I have like I don't sign into like Google accounts on my thing. So whenever I click the link, it just like it opened up. Didn't open up the app. It opened up the internet. Anyway, I'm sorry I'm late, but I'm here.
Hey, James, glad you made it. And thanks for covering for a while there for James. Um, no, I know what you mean. It's a bit confusing to get on Spaces. It's like only supported on mobile. But anyway, glad you're here. So from Pangolin, we have myself, Leo. We have Ken, our CMO, and Andrew, digital marketing. And let's hear a little bit about yourself, James. How did you get to your current role and form this project?
Yeah. So actually, I had the idea for this thing in 2019. If anyone here is familiar with GSN, gas station network, it's like it's a way to do meta transactions where the user doesn't have to pay for the gas fees for their transaction. I was just like looking into it for out of interest and realized that like transactions don't need to be relayed like immediately. They could be held on to. So it just kind of gave me the idea for this like automation network and doing things under certain conditions and yeah, I think it was like too early at that time. Went to like SF Blockchain Week hackathon and in 2019, like got a prize for it, but it was too early. And yeah, like DeFi summer happened, and it was pretty clear that like now is the right time. Like DEXs were obviously getting bigger and bigger and bigger, and more advanced trading functionality was just like really needed and like apparent as a general market need, and there was obviously a significant market for it then. So yeah, just started coding like an MVP since like Christmas, and it got to the point where I was like, well, like I finished the MVP, and it was like I stop working on this project, which is like ridiculous, or I quit my job and build a team and start raising and everything. So yeah.
Wow, that's awesome. It's cool that you had the concept like even before DeFi blew up, you were thinking of these types of solutions. That's really cool to hear. And so let's dig into a little bit about the specific problems that you see with DEXs, with DeFi right now that Autonomy is trying to solve. Can you explain a bit more on that?
Yeah, so the problem space that autonomy is tackling in general is like a broad thing is that you can't be online 24/7. Like crypto is 24/7, but users are not. So I mean, you need to be like at the computer typically and like pressing sign transaction in order to actually do something, and you can only do it like at that moment in time for whatever the price is in case of dexes. So yeah, it's basically there's no risk management or ways of like trying to buy a dip if you think there is, because obviously everyone has to like sleep or go to work or whatever. So yeah, it was that's our kind of like main use case at the moment. It's our main like our beachhead as a project. I think it will probably always be the largest use case because it's obviously like high value, high frequency use case. But yeah.
That makes a lot of sense. The fact that naturally you can't, you have to do things in real time, like you said, on the blockchain. And maybe we'll get some thoughts from Ken and Andrew. Have you guys had personal experience or frustrations with the fact that you can't say, hey, do this transaction later without a third party tool?
I can say that yes, I've experienced that, but not on Avalanche. No, I'm not saying that to shill Avalanche, but it's true. But what you're describing really resonates with me from my Polygon experience as an end user. I've had plenty of times when that should have been the case, but there were transactions that got hung up or stuck, or it appeared that they were that I needed some urgency. Whereas, contrast that with what you're saying, in many other use cases that you could just say, all right, cool. I signed this and approved it, but process this stuff later that doesn't have the kind of urgency that comes with it. So I definitely see the application of instant time to finality transaction versus delayed process these transactions, as a fork on the road for two very different types of use cases.
Awesome. Yeah, thanks for sharing that, Ken. Yeah, so I'm curious, James, do you have like a trading background or an economics background, or what got you up to speed and into the actual trading part of crypto and DeFi?
I don't have not like any formal training. Actually, I was doing a physics degree when I dropped out, like last bull run. I dropped out in my last year to do it and go do some like. I went to go work for a firm that was doing tracking and de-anonymization, similar to the company Chainalysis, doing it for clients like the FBI and stuff. But anyway, not really any formal training. It's just from like I'm just obsessed in this space, and I've just been heavily kind of interested in like playing with like DeFi for like a long time, and just like observing and seeing seeing the kind of like use cases and where I think the market, like where the space could be and kind of what's holding it back. And I thought this was like a big thing holding back kind of DEXs in general, and just the general move from centralized to decentralized. Because when you just look at it from a feature perspective, like some users obviously like will only go to a place to trade, and this is just from like people I know who are like this. And obviously not everyone is like this, but some people really need like limit orders or trailing limits or stop losses or like leverage or whatever, and to only have this like simple market order functionality, I think like is preventing a lot of like liquidity and volume from moving from centralized to the decentralized exchange space. So yeah, even though I'm not a trader by any means, yeah, it seemed kind of obvious to me, and I think people weren't really tackling it. To be honest, I think the automation space has a bit of history. I think the first ever one was called Ethereum Alarm Clock, but it was kind of it was way ahead of its time, and also was it was extremely expensive from like a gas perspective. You had to deploy new contracts for everything, but also it wasn't focused on like having a product market fit. For example, like with DEXs, I mean, probably because the space was just like way too early back then, because this was like years ago, and yeah, obviously things have changed a lot since then. But yeah.
Got it. That makes sense. And I think it's really cool to hear people like you say, like, I was so passionate about pursuing this that I dropped out of school. I've met several people like that, and there's just so much inspiration that comes with that type of decision. So I'm glad to hear that. So a couple more topics that we're going to try to cover today, and we'll save some time at the end for questions as well. I want to learn a little bit about your perspective on Avalanche versus other chains, since you have a presence on other chains. I want to learn about if there's a token in your future, and maybe just what's on the roadmap. So let's talk about the multi-chain world. So you said you're on BSC, you said you've used things on Ethereum, and now you're building on Avalanche. What's your perspective on the differences between all of those chains?
Yeah, I mean, for us, the kind of goal is just like volume is volume, and we want to, be on as many chains as possible to therefore get as much volume as possible, as a project, as a network. Avalanche seems pretty cool in that, obviously it's like relatively high TPS and relatively quick like finality. So but from the perspective of the project, I'd say like the kind of perspective of the project is about the difference between having us and not having us. So even though Avalanche is like great for the users for like a variety of reasons, like those I just mentioned, from like Autonomy's perspective, the value that we provide, like on top of the kind of default user experience, I'd say is pretty similar across the board. Yeah, I mean, yeah, especially because they're all like EVM compatible chains. We are working to get onto Solana, but even then, like I think it'll be relatively similar.
Yeah, that
Yeah.
makes sense. That for kind of like a platform as a service like Autonomy, um, you're just looking for high volume and high usage at that point. And what about the culture and the products? Is there like a noticeable difference? Because all these chains did launch at different times and are at different levels of maturity. Do you see any difference when you're hopping around between the chains?
Yeah, I mean, I'd say Avalanche compared to say BSC is a lot more sophisticated. You could say, but maybe that's just because BSC is like particularly degenerate. But it's even compared to like Ava compared to like ETH or Polygon, I'd say yeah, it seems to be more sophisticated. It's kind of interesting because like there's been like a lot of UniV2 forks on various chains, like BSC and Polygon and obviously Avalanche too. And it seems like with each kind of iteration, they get more and more refined and kind of leave out a lot of the fluff. Like obviously you guys and also like Trader Joe both seem to be going towards being like a one-stop shop and kind of having like for DeFi and kind of having all the things built in that users expect. And that isn't really something that we've seen as much of or has been kind of delayed in like the BSC, etc. space because they kind of like focus on like yield farming and that kind of stuff. It's just as quick gains rather than more kind of fundamental value in like providing actual platforms for like people to build on with like lending and obviously trading. And yeah, so I'd say it seems more sophisticated, to be honest.
Hey, that's a great compliment to hear from someone like yourself who's been in this space for so long and who has traveled all the chains and probably has used, most of the major dexes. That's great. And what about you, Andrew and Ken? Have you used, BSC Polygon? Does it feel different to go over there and use a dex there?
I think so. Yeah, without being redundant, I think James summed up BSC really well. I think the difference is that Avalanche has benefited from DeFi's more immature phase on those other chains, and there's just a lot more maturity in terms of less rug pulls, less shady, degenerate type sites. Every project or platform that is in DeFi and Avalanche is really focused on making it clear what value they offer to you as a DeFi user. On Polygon, that's still true, but not to I think the degree it is true for Avalanche. I still spend a lot of time on Polygon as well, and the dexes there work well, but it all depends on the dex. There's still a lot more diversity in terms of the maturity of dexes on that chain, and then on BSC, I think PancakeSwap just kind of reigns supreme there. But I definitely echo James' sentiments on some of the differences there, and it is refreshing to bounce around on DeFi and the Avalanche world and just not have to run into so many of those dark alleys and uh, shady corners and things that may exist a lot more out in the open on some of the other chains.
Awesome. Thanks for sharing your perspective. Yeah, I've tried most of the major chains too, and I agree. Avalanche just feels clean and professional and safe, and I really like that as a user. So James, let's talk a bit about the future roadmap. I'm excited to hear like what is the goal and vision of Autonomy. Where do you want to take all of this? And also, is there a token coming?
Yeah, so the kind of taking it to the nth degree, we essentially want to be kind of a critical infrastructure layer for basically all blockchains for adding for automation and therefore like adding all these kinds of features like limit stops, recurring payments, etc. kind of all chains equally. We will have a token. We're currently targeting around roughly December. TBD, like exact date so far. Like the whole system is live, obviously, except the token. And it will actually be like it is actually necessary for the system because you have to stake it in order to run executors, executing bots that execute these the requests that users make like limits, etc. But in the short term, we are working on impermanent loss protection, which I know is something that I think the Pangolin community is quite excited about, which we think is super cool. That you guys are interested in it because it kind of goes back to the sophistication again, because impermanent loss is something that's often overlooked, and we've talked about it to a few dexes and gotten like varying levels of interest. Generally, everyone's like at least a bit interested, but the fact that not just like the dexes, but Penguin's community seems to be interested in it is like a good sign of actually knowing the shit, so to speak. But yeah, that impermanent loss in the short term as like a kind of ready-built feature for dexes to be able to integrate. More long-term, like we will always be kind of focused on dex tooling as like our main economic use case, but we want to shift a bit more towards like autonomous NFTs and the whole gaming space and metaverse space, because for example, like you can't have NPCs, like non-playable characters in blockchain games at the moment, because like blockchains are passive, like you need to interact with it in order for it to do something. So NPCs kind of like suck in games right now, blockchain games, and that's the reason that most of them are like PvP or P2P orientated, with like breeding CryptoKitties or whatever. But yeah, we're using Autonomy. You can not just like automate a single action like a limit order, but also make a contract autonomous, like an NFT. And if that NFT then owns itself, it's able to take actions by itself to do like various other things. Arbitrary things under arbitrary conditions, in a way that's not controlled by anyone, and kind of effectively acting like an NPC in a video game. So I think that's going to be like a pretty interesting use case where like an NPC can interact with you or interact with other NPCs. I think the market for that is not. It's very small. I wouldn't say it's not there. I'd just say it's like extremely small. So it's much more of a long-term play for us. But certainly, yeah, in the long term, that's what we'll like shift a bit towards, but always kind of like focusing and trying to improve the DEX feature set. Yeah.
Awesome. That's very ambitious. I like that vision. And I'd like to dig into one feature in particular that I am interested in and the community is, and that's the impermanent loss protection. That is a hot topic for yield farmers, and everyone's looking for that. Can you tell us a bit about how that works in Autonomy?
Yeah, so you can think of it like a stop loss for providing liquidity, LPing. It's essentially the user experience would be that you, when providing liquidity, just have an extra field that you fill out in the UI that says like what percentage, in the simple case, like what percentage of divergence from the token prices you're willing to accept. So like say you're on like a, like a stablecoin pair with some other volatile token, you could say, well, if the volatile token goes up by 10%, then I want to kind of exit the liquidity position and trade all the stable coins for the volatile token, because maybe you think it's going to keep going higher if it already went up 10%. Because if you didn't do that, then you would just obviously like be keeping half your assets in something that isn't going up. So yeah, it's essentially like the UX for the LP is basically just defining this kind of boundary, this limit, after which you want to exit the liquidity position. So what can be done with that is pretty arbitrary. Like after exiting the LP, you could either trade one token for the other, like I mentioned, or you could refinance and like lend out to I don't know, a lending platform, or do some arbitrary stuff. Like literally anything is possible. I think for the simple use case, we'll probably just do like trade one token for the other. But super keen to like hear the community's like thoughts on like what they would want to happen to like to their liquidity like after reaching this like impermanent loss limit.
Wow, that's very interesting and a clever way to solve it too. I'm interested to hear Ken and Andrew's perspective on impermanent loss and the solution.
Well, it sounds awesome, and I know it's something that holds a lot of users back from participating in liquidity pools. And I mean, personally, I know that's a reason that I've looked for one-sided staking a lot of the time. And so I'm just happy to hear it's coming and that someone has that in their scopes soon.
Yeah, I think it's an often misunderstood concept, right? Impermanent loss. I think a lot of users expect that it's possible to solve for it completely, but I'm not sure if it can ever fully go away. I mean, that's the nature of an AMM, is that the LP providers take on risk and they are rewarded often handsomely with like 100% plus APRs, right? So that's that's the incentive to take on the risk, I think. But it's great to see that there are solutions coming to at least mitigate most of that risk, right?
Yeah, and we often see how an innovation builds on itself. So this might be one tool that really helps and can be built on even further. So I think it's great.
Yeah, totally. It's interesting that it was mentioned that like LPs take on the risk, which I definitely think is true. I mean, that's why they get paid so much. But yeah, because like Uni v3 kind of sort of addresses this issue by having these ranges where people are willing to provide liquidity. But the problem is obviously like once you go out of that range, you stop providing liquidity and therefore like lose out on all the fees. So this is kind of a way to remain as a passive investor or passive liquidity provider, but still reducing your risk, so to speak. And then you could think theoretically, kind of economically, if you reduce the risk as an LP, then more people will LP, and then users will get better prices, and it kind of helps the whole ecosystem, not just LPs.
Yeah, we are extremely excited to integrate with that. Like I mentioned before, we're trying to build the UI integration directly into the Pangolin app. It should be great. I think that'll be the first offering of this on Avalanche.
Yeah, I think you guys will be first before anyone actually, because you guys have been pretty quickly moving. We've been talking to some other dexes, and they are slow, to say the least. So, yeah, I think you guys may just be not just the first on Avalanche, but of any dex actually, which is super cool.
Wow, exciting! Sure, our marketing guys are going to plan some pretty cool, hyped announcements around that.
Yeah, I'm writing that down right now.
Awesome. So maybe just a couple more questions for you, James, before we turn it over to audience questions. Maybe a more general one. I like to get our guests' perspective and tips for new users. James, what do you have to say to anyone listening is their first time in DeFi, they're thinking about dabbling? Any tips or advice?
Yeah, I'd say just I think one of the best things to do is like learn by doing. Just to go to different DeFi projects, protocols, and like just try them out. Try lending with this like relatively like small amounts, like $10. Obviously, that's impractical to say the least on ETH, but fortunately on like Avalanche and other whatever other chains, yeah, I think it's certainly worth doing just to get a feel for how it works, and then also once you kind of dip your toes in the water, it's a lot more motivating to read the theory, because one could say like, oh, you should read do all your homework before you put any money in or whatever. But I think users, the reality is that people will often, I think, get discouraged from actually reading as much as they should, because it's a lot of it seems kind of boring. Not all of it. I mean, not necessarily any of it if you're I don't know, a DeFi obsessed nerd like myself, but I can definitely see that some people would find it boring, and I think the best way to solve that problem, so to speak, alleviate that, is to just to be invested, quote unquote, like not literally in the sense of like buying whatever shitcoins, but actually having involvement in whatever protocols. So yeah, just like try staking, try lending, borrowing, all that kind of stuff. Yeah, just to get a feel for it.
Awesome tip. So yeah, to summarize, just go and try things, be safe, try small amounts, learn by doing. That's great. So hey, James, are there any topics or questions you wanted to cover that we didn't talk about yet?
I don't think so. Nothing in particular. Just keen to hear other people's questions and what they think would be cool to do with like after impermanent loss, like with the whole impermanent loss thing, like after it hits the bound, what would be cool to do?
Yeah, let's open it up. Hey, anyone listening to this chat, if you have a question or a comment, just hit request speaker and we'll get you on here.
James, while we wait for somebody to raise their hand, I'm curious about your experience working in an accelerator through this. Is this your first time in that sort of position, and how's it going? What do you like about it?
Yeah, it's my first time, and Dio, my co-founder, who's in the other room. Yeah, both our first time with an accelerator, and yeah, it's definitely a positive experience. We thought the most kind of value would be like the network, because it's Consensus, the company, obviously like been around for a long time and pretty key player, like within certainly like the ETH space, but like just blockchains in general. So yeah, I'd say like we kind of got what we were hoping to get out of it. Like the network is really great, and like our seed round that we've been doing has been oversubscribed like a few times over technically. So yeah, because we did obviously it ends in Investor Day, so yeah, got a lot of interest from that.
Awesome.
Good question, Andrew. Thank you. Anybody else in the audience want to come on, say something, ask a question? If you don't feel comfortable speaking, feel free to drop by the Telegrams, Discords, Twitters, shoot us a text question. Hey, I see we have another Andrew on. Are you there? Do you have a question for us?
Yeah, I'm from Nigeria, and I've been following your project, the Pangolin project, for a very long time. And I don't know if it's allowed to ask about the price, because since I came into the space, I noticed that the price have been going down, 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 and I've even tried to publicize this to my friends and colleagues at work, and they're a bit disappointed about the price. So I don't know if there is any plan or wherever that could probably push the price upward.
Yeah, I mean, that's an interesting topic. Legally and regulatory wise, we're not allowed to say like, hey, the price is going to go up because of this, or it's going to go down because of this. It's just, a highly regulated environment, especially since we're like a public doxed team. That's not really allowed. I can comment though that, as the Pangolin team and as the community, our job is not only to support the investors in the token, but to, build a DEX, support the ecosystem, make sure we're adding quality features and partners and all of that. And some of this does affect market action, but in other times too, market action is uncorrelated with things we build and things we say, right? Like there are so many forces that go into making people want to buy or sell and which token they choose. A lot of it is outside of a team's control. And I think, I hope that the community realizes that we're trying to build the best possible project that we can and build a strong team around it. And we are a community-based DEX, so we want a lot of input from people like you, from everybody. So yeah, I can't really comment and say like, hey, we're doing X, Y, and Z, and that's going to send us to the moon. It's not allowed. But I can say that if you've looked at our progress over the past few months, the team's grown tremendously. We're adding some excellent partners like Autonomy, and the roadmap looks bright. Like I think that's all I'm allowed to say, really. So I hope that answers
I'm
some
great.
of your question.
Sure, I'm quite okay with that. Thank you so much. And I will keep on supporting your project. Thank you so much. Yeah.
Hey, I appreciate it. Thanks for coming on to ask a question. Cool. So does anyone else have anything that they want to say or ask? Okay, well, I think it's a good time to just get some parting thoughts. Let's start with Ken and Andrew. What did you learn, or what thoughts do you have after listening to James? And I see we have another question, so we'll get to it after Ken and Andrew give some thoughts here.
I think one of the most exciting things for me personally is just how you're trying to tackle impermanent loss. It really is, an easily misunderstood issue because it's so complex, especially depending on how what DeFi project you're engaging with, and based on how they're stacking all these money Legos together. And thus far, the solution to that has always fallen on the individual DeFi user. Even with Uni v3, like you brought up earlier, James, it's great, but because it narrows the gap and gives you more precision, but it doesn't really solve the problem. I think what's ultimately going to be best for DeFi users is how people like you, and I've seen a few others that have integrated their approach to solving impermanent loss into their product in a way that takes the burden off of the individual end user, right? It's like shifting the complexity from it's all in my lap and I got to figure out how to decide and solve for it, as opposed to it's been solved behind the scenes and integrated into the product in a way that's automatic to the end user. And that's really what's most exciting to me, is I think once that gets solved for, that DeFi will embrace that as a standard, and you'll see that basically everywhere.
Yeah, I agree with Ken. Really looking forward to that spreading, and I really liked hearing the story of how you came to start the whole thing, and it was really interesting. So thanks.
Awesome. Thanks for those perspectives. Hey, CWO, I saw that you had a question. Did you still want to come on and ask that? If so, go ahead and hit request speaker. If not, James, do you want to leave us with some parting thoughts here?
Yeah, sure. I'm just super excited to be honest, to be pushing this through. Yeah, I think the impermanent loss stuff is just kind of the tip of the iceberg for what we can do with like automated DeFi stuff. Because hopefully things will start to get to. Yeah, we can hear you, by the way. CW. If that was you testing your mic.
Can you guys hear me? Yeah. By the way.
Yep.
Oh yeah. Hey Leo. Thanks for letting me jump in here late. Early in the morning, so not as many people jump on here. So maybe I can get a few questions answered. First is kind of just simple for Elk Exchange is something that's known around the Avalanche ecosystem, and they have a solution for impermanent loss too. Not necessarily on the executable side, but I was wondering if you had seen theirs and what you thought of what they were doing in terms of trying to solve the problem for impermanent loss.
Hey, are you trying to get Pangolin's perspective or James here?
Just James' perspective.
I'm actually not familiar with their way of doing it. What's the TLDR of the technique?
I think the technique is issue more tokens or something like that to change the yield or something. I'm not really sure. That's why I was just curious if you had seen it. My other question was, have you on the other side? I hear people making indexes and creating kind of pools of money, and I agree with you on permanent loss, and just being able to make an execution audit in an automated way is important as more layer in. Wondering if you're getting any inquiries from indexes saying, hey, we want to spread across these pools, but we also want to be able to execute maybe a batch of transactions. It's one thing to say, okay, I want to exit this position at, I've got $1,000 in this pool and I want to get out of Doge and get back into a stable, or get in from a stable and go to, enter into Doge. But it might be another thing to say, hey, I have $100,000 here and now I need to step out of this trade and do 20 transactions to fulfill this, because I don't want to just dump it all on the market right now.
Yeah, we've had interest from a couple of players like that. Pretty huge just yet, but I mean, we haven't been reaching out to any because we've been so focused on the DEX space. I think it's the more the highest value, highest frequency use case. But once we kind of get to a point where the DEX space is saturated for limits and stops and everything, we will start reaching out to more of these. But a couple have reached out to us. Yeah, it's basically for the kind of stuff you're mentioning, or at the very least rebalancing of a portfolio. With these, I don't know if I call them funds or indexes, but I mean, I think they'll have tens of millions of dollars in them, and whatever strategy they want to execute. I mean, Autonomy can handle arbitrary logic with arbitrary conditions, so they'll be able to do basically whatever they want. So yeah.
Cool. Thanks for coming on and ask those questions, CWO.
Yeah, thank you guys. It's interesting. It's interesting. Of course, Pangolin's going to be first with a cool implementation. Leo, we know you're on top of it. So looking forward to seeing it in production.
Thanks. Appreciate that. Cool. So I think it's a good time to wrap up. Oh, go ahead, Ken. Go ahead.
Yeah. Just didn't want to interrupt earlier, but I can explain and answer that question about how Elk Finance is tackling permanent loss. It's essentially they're providing insurance, and the insurance is something that you have to earn. It's prorated for the amount of time you spend, active providing liquidity into the pool. After I think it's 40 or 42 days, you have 100% coverage, but you earn a certain percent coverage with that insurance for every one of those days up to that point. And what the insurance does is essentially Elk is subsidizing impermanent loss with their own treasury, their own token, right? So behind the scenes, if your ratio is getting out of whack because of impermanent loss, they're going to basically rebalance it at their own cost using additional Elk, their own token that's in the pool. So it again, not perfect, but I think what no one has solved it perfectly, but it sure is a great way to add more utility and value to your.
That's pretty interesting. I had never thought of an insurance based approach before. I guess it's pretty cool. I mean, I guess the main difference is that they obviously are having to pay out of pocket themselves for that, whereas with Autonomy's approach, it's more of a prevention rather than a cure. But yeah, interesting. I wonder if you
Yeah, I think you nailed it, though. That's, to me, an indicator of the right direction. You don't want to treat the symptom. You want to prevent it in the first place.
Yeah, totally.
Yeah, and they're not addressing upside, right? They're only preventing the loss, right? I guess there's another phrase here I call impermanent gain, right? Where one of my tokens goes up 10x and the other one only goes up 2x. And did I miss an opportunity there, right? And you guys are there to jump into that space as well. Can I ask one more, lob out one more question? Because maybe I'm a novice in terms of how a stop loss would work in maybe in times of I'm like at breakdown moments. What would happen at a stop? Obviously, a stop loss, if we're ticking up and ticking down and we go across that threshold, we can execute that trade. Oh, I'm sorry.
Yeah. So basically, the question is like, how would a stop loss work in the context of an AMM, right?
Yeah. Well, maybe in terms of like when the market's really moving, not necessarily, but when there's high fluctuation. Is there guarantees on that exit on that trade? Because normally in an AMA, when I make a swap, it says, you're only going to get this, you're only going to get it. It's only going to work if it's, if you're going to get X tokens and, you put in your slippage and you're happy with as long as it meets those conditions. And a stop loss, this is like, hey, we want to trade this at no matter what right now, especially if something's really moving from, in terms of a percentage.
Yeah, so the way it works at a slightly more technical level is that, with the limit order, the way it works is you have a requirement kind of in the code that says, we require that at least this many tokens is output, and the same is true with a stop loss, but also with a maximum amount of output. So you define the maximum, which is kind of how you define how you prevent it from executing until it dips to whatever price it is. But it's maybe slightly more abstract than necessary. But essentially, we put it in Autonomy that you can define the minimum amount you receive. So you can define it to be 0. Which would make it act like a regular stop loss, where you want it to execute no matter what, like regardless of whether it's like significantly below the kind of trigger price or not. Like it'll still execute, but you can also choose. We leave it up to the UI that's integrating this whether they want to expose this to the user or not. But in principle, the user could define that they want a minimum. So like say they wanted to sell ETH when the price hit like 1,000, but they wanted to never receive less than an 800 price point. So they could define that, or they could just define it as 0 and like guarantee that it executes no matter what.
Okay, thank you for that. That's wow, that sounds cool.
Yeah, no problem.
Hey, thanks for that in-depth explanation. It gets me even more excited about the stop loss for impermanent loss, and I'm very excited to integrate that and see it live. So,
Hey, Leo?
Yeah.
Just wanted to add one more thing because I think accuracy is important. Something we were talking about earlier with that ELK finance insurance approach to IL, it actually works both ways. They pay out, it covers the opportunity cost. It's not just the loss. So if there's a gain, they're doing the same thing in reverse. It works both ways. So it's pretty good coverage.
Well, that's awesome too. Appreciate you explaining that, how the other apps try to solve this problem of the IL. So I think we're out of time now. I just want to say thanks to James and his team for joining and teaching us about autonomy and how all that works. I want to thank Pangolin team for adding their color commentary and all of our listeners and people asking questions. So this has been our chat with Autonomy Network. Check out their website, their Twitter, give them a follow, and we'll see you next time. Thanks, everyone.
Cheers, guys. Yeah, thanks for having me, and also for Overlord Actual for covering for me in the beginning. But yeah, let us know like what you guys want to see from like IL protection, etc. So yeah, cheers.
Cool. See you guys.